Hi students, good evening, those of you that are online, and hello to those that are listening to the recording later, and welcome to the collab this evening. So I was just waiting to see if there's anybody else joining late, because usually there's one or two students that battle to join and then they miss the first couple of minutes, but it looks like we're all here for the evening. Okay, so just a reminder before we begin, you guys also have your NSS National Support Session for your assignment 1 this evening at 6:30. George Boysons is going to be running that. He's doing that for this particular module this semester. I have posted the link in your announcements, so you can pick that up there. And I will be sure to finish this evening by 15:15 or 6 at least, so that you've got time to get yourself organized and log on to that session. And then also remember, if you, for any reason, can't log on at 6:30 to the support session, then George will send me a link to the recording, and I'll post that for you guys as soon as I receive it from him, and then you'll be able to listen to the support session in your own time as well. So you won't miss out on anything, either on this session we're doing now or on the session with George. So everybody should be good. And as always, remember, if anything that you're battling with or you're not sure of, then just give me a shout. So what I thought I would do this evening is, where's my textbook? Sorry, just grabbing some things that I had down the bottom there, is I want to go over a few aspects from Learning Unit 3 with you this evening, just as kind of like revision. So Learning Unit 3 is your VAT chapter. So it's a super important chapter. These calculations for your VAT and your markup and gross margins, which are all in this in LU3, you will use these calculations and principles regarding VAT for the rest of the semester. So it is important that you make sure that you know everything in Learning Unit 3, and you study it, you memorize it, you understand it, and you practice those calculations. Oopsie, sorry. So honestly, the most important word there is practice. These calculations, VAT calculations and gross markup calculations and markup on cost calculations, the only way you're going to master them is if you sit down with a couple of blank pieces of paper and your textbook with some questions, and you just practice those questions and the calculations in the examples and the questions over and over again until you're comfortable doing them, that you can get them right without looking at the answer, but most importantly that you understand what you're doing, because once you understand what you're doing when you're adding VAT or subtracting VAT, it just stops being a problem, because then you know exactly what to do. It's not a case of like memorizing and then forgetting on the day. If you understand what you're doing, you can always work out how much VAT to add or how much VAT to take off from a VAT inclusive amount. Okay, so I just want to share my screen now to go to pull another document up onto the screen and to just go over a couple of things with you, and then we'll have a look at a couple of calculations. And any of the calculations that we don't have time to do this evening, and I don't want to rush them, so any calculations that we don't have time to do this evening, I will do a separate recording for you guys and then post that for you of just some work-throughs of calculations for VAT and markup, etc. Okay, so don't worry, you will be getting enough guidance and enough enough examples of the work-throughs to be able to sit and work through them on your own. Okay, so before I start, and not forget, has anybody got any questions, anything that you wanted to ask about anything at all before we continue? Anything that anybody wants to know? Any observations, any questions, any worries? Remember, these sessions are informal, so just open your microphone or put your hand up and I'll call on you, or type in the chats. You can type message each other in the chat, and then I'll keep an eye on the chat so that I pick up anything that you put in there throughout the session. Okay, awesome. Thank you. All right, so now I'm going to pull up this document. So this is then some information from Learning Unit 3, VAT and source documents. So as I said, there's a lot in Learning Unit 3. It's one of your foundation modules that contain important information that you need to master right at the beginning of accounting so that you can go on and do the rest of accounting. So in your textbooks, your Learning Unit 1, Introduction, Learning Unit 2, the accounting equation and the double entry system, and then this Learning Unit 3, VAT source documents. And this chapter also contains your markup and your gross margin calculations. Those 3 learning units are foundational, that contain the basic rules that you're going to use for the rest of the semester and the rest of accounting if you carry on with accounting after this as well. Okay, so let's just have a look at some key concepts that are covered in LU3 regarding VAT itself. So in South Africa, any company who carries on a trade, if their annual turnover is 1 million rand or more, so that's on a rolling basis, so for the immediate preceding 12 months, as soon as they reach 1 million rand in turnover, then they are obliged to register as a VAT vendor. So a VAT vendor is what we call a business that trades, that is registered with SARS to charge VAT to their customers. And then that VAT is then paid over to SARS. So what happens then is these businesses become tax collectors on behalf of SARS. Because what SARS is saying is, okay, you're a big enough business now to act as a tax collector for me. So each sale you make, on top of your own selling price, I want you to add another 15% VAT, which is a tax value added tax, and then work out how much that tax is at the end of every month and pay it from your bank account, the business's bank account, into SARS's bank account. So this is VAT is a tax that the government levies on consumers. So the person who's actually paying that VAT is the person who purchased those goods from that business. They then become obliged to pay the purchase price of the goods to the business, and in addition to that, they have to pay the 15% VAT. So the purchase price goes to the business and the VAT gets paid over to SARS. So it's a tax collection mechanism that governments all over the world use. So then just 2 terms that you need to remember: input VAT and output VAT. So if you think of the word input, when we purchase goods, sorry, let's wait for this to. When you purchase goods, they are coming in to your business. That's what we then call input VAT. Okay, so just think of it, link it like that. Goods that I purchase, those goods are coming into my business, and that VAT that I am paying on those goods is called input VAT. Then our output VAT, that is sales of goods that are going out of your business. That VAT we call output VAT. So that's an easy way to remember it, because students always get muddled up with input VAT and output VAT, and they don't know which is which, and you quite often get questions on that. So input VAT purchases into my business, and output VAT is on the sales that I sell out of my business. So that's just an easy way to remember. So the output VAT is the VAT that the business has to collect from their customers and pay to SARS, and the input VAT that a VAT vendor pays to the suppliers that they've purchased from, they claim that VAT back from SARS. So the net amount of VAT that goes to SARS at the end of a VAT period is then all of the output VAT that you charge your customers minus the input VAT that you paid to your suppliers. And then that's the rand value. That net amount is then the rand value of VAT that a business then has to pay into SARS bank account. So this exercise of doing this calculation, adding up all the input VAT that I charged my customers, adding up all the input VAT that I paid to my suppliers, and then subtracting them from each other, that is what we do in our VAT return at the end of the month, or end of every second month, when we have to send that VAT return into SARS. So guys, really, if you just remember that, input VAT paid on goods coming into the business, output VAT charged on goods going out of the business, and my net amount of VAT paid to SARS is the output VAT minus the input VAT. And then that will give you a good understanding of how VAT actually works. Okay, so when we're talking about VAT, we also now are talking about, you'll hear the words inclusive of VAT or including VAT, and you'll hear the words excluding VAT or exclusive of VAT. So that's what you've got to look out for in questions or in exercises that you get. When you get a question, read it carefully and have a look at each amount. Have they told you that that amount is including VAT, or have they told you that that amount is excluding VAT? Because then that will tell you which calculation that you've got to do in order to work out how much the VAT amount is, that you've either got to add on to the excluding VAT amount, or that you've got to deduct from the including VAT amount. Okay, because our job as a business is always to be able to separate from the total rand value of an invoice, which will always be the including VAT amount. So on an invoice, either that you send to your customers or that you receive from your suppliers, on the body of the invoice will be a description of the goods that you purchased with their purchase price or selling price, and underneath that the amount of VAT that was added on, and the total of the invoice is then always the inclusive VAT amount. So when we record those invoices in the books of our business, we have to take that including VAT amount and we've got to split it. We have to know what the excluding VAT amount is, and we've got to know what the VAT amount is separately, because they get recorded in separate general ledger accounts in our books. Because the excluding VAT amount belongs to the business if it's a sale, or is the cost for the business if it's a purchase, and the VAT amount on its own is then the VAT that we are either going to pay over to SARS or that we are going to claim as a refund from SARS. So that's the calculation that we've always then got to do, work out how much the sales excluding VAT is and how much the VAT itself is, so that we can record those two amounts correctly in our books. I just want to see if there's anything here that I want to go through. I don't want to go through too much detail here. Okay, so let's just have a look at this example. So we've got U2 suppliers. They purchase inventory from Macro Limited. Okay, so suppliers is the VAT vendor and Macro Limited is one of their suppliers, and they pay them by check. The amount on the invoice is 5,700, and that's including VAT. So that is the total rand value of the invoice. Then the next day, all of these goods that U2 suppliers purchased is sold to one of U2's customers at a total selling price, including VAT, of 9,120. So then we can see that the 5,700, including VAT, is the cost of the goods that U2 purchased in order to make a markup and then sell at a profit to their customers. Okay, so that's how business works. We either manufacture goods or we purchase them from someone else. We add on a markup so that we can make a profit, and then we sell the goods for more than what the goods originally cost us. Okay, so that's what's happening here. So the amount of 5,700, including VAT, is what we had to pay to our supplier. So we have to pay the full amount of the invoice. In other words, the amount including VAT is the rand value that we've got to transfer to our supplier's bank account. Okay, and that includes the VAT. So as I explained just now, so what we have paid is two separate items. We've paid 100% of the purchase price for the inventory, and which goes to our supplier. That's the money that belongs to the supplier. We've also paid our supplier 15% of the purchase price, and that is the VAT that our supplier is going to pay over to SARS. Okay, so if we express this as a percentage, the 5,700 is 115%. If you think of it over here, we've got 100%, which is the cost price, excluding VAT. Then we have added 15% VAT onto that, which means that the total, including VAT, is 115% of the original cost price. So always remember these numbers. When you look at an including VAT amount, that represents 115 parts. The excluding VAT part of the purchase price is 100%, and the VAT portion of the purchase price is 15%. So it's your selling price, or the price of the goods. I'm calling it a cost price here. We add 15% onto that. So the excluding VAT plus 15% equals 115%, which is the including VAT amount. And you must remember those percentages, because those are the percentages you're going to use to do your calculations. So if in a question they give you an including VAT amount, and you've got to work out what the excluding VAT amount is, you're going to take the including VAT amount and you're going to multiply that by 100 over 115, which will give you then 100% excluding that amount. And if you want to work out what the actual VAT portion is, you can take the including VAT amount and you multiply it by 15 over 115, and that will give you the 15% amount of just the VAT on its own. Okay, so this is what you will do if you are working from, let's say, the right-hand side of the equation back to the left-hand side. In other words, we're starting with the including VAT amount, and we want to work out the VAT only and the excluding VAT amount. Okay, then it's the including VAT times 100 over 115 to get the excluding, or times 15 over 115 to get the VAT itself. There's another calculation you can do. You can also say including VAT divided by 1.15, and that will also give you the 100 excluding. So always remember, when you divide, you're going to end up with a smaller amount than you started with. So your excluding VAT rand value is always going to be less than your including VAT amount, because your including VAT amount is the purchase price plus the VAT, whereas your excluding VAT amount is the purchase price without the VAT added on. So these are your two calculations that you will do to work out the excluding amount if you've been given the inclusive VAT amount. And once you've got your calculated your excluding VAT amount, you can also just take the including VAT amount minus the excluding VAT amount in order to calculate the VAT itself. You don't have to go and do another calculation like this to calculate the VAT, because including VAT minus excluding VAT amount equals the VAT. Okay, so just remember that including VAT minus the excluding VAT will equal your VAT only. And then what are you going to do if they've given you the excluding VAT amount? So now we want to go from the left-hand side to the right-hand side, and we want to add the VAT to calculate the including VAT amount. That's the easy one. The excluding VAT amount times, and you can just say times 15%, and then you can, let me just see, now I've gone out of there. Can I go back in? I don't know if I can type over. Oh, yes, I can. You can say times 1.15. In other words, you're taking the excluding, which is the 100, and you're adding another 15% on, and that will give you the 115, which will then be the including VAT amount. And if you want to, if you're not confident, you can also say the excluding VAT amount times 15% equals the VAT. And then you can take the excluding plus the VAT equals the including VAT amount. Okay, so either excluding times 1.15, and that will give you the including VAT, or you can say the excluding times 15%, and that will give you the VAT only, and then you can add the two together, and that will give you the VAT including. But the most important thing is that you must remember the two different calculations. Am I working from the left to the right, from the excluding to the including, or am I working from the right and I'm going backwards to the left? I've got the including and I'm trying to work out the excluding VAT. Does that explanation make sense, guys? Oopsie, sorry, let's go back here. Does that make sense to you guys? Have you understood? Did you understand that? So remember, this is going to be in this recording, so you can come back and listen to that part anytime that you are stuck and you've got yourself muddled up with your VAT calculations? Okay, good, good, good. Awesome. And as I said earlier on in the chat, practice, 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 practice. It's the only way to get it, and then it will start coming naturally. I'm going from the left to the right, I'm going from the right to the left, up and down and up. And the more you do that, the more comfortable you'll get, and you'll end up not even thinking twice anymore when you're doing your VAT calculations. So yeah, the rest of this little section here is basically what I've been explaining to you up here in these calculations. So these calculations are also in your textbook. They are, your VAT calculations are on, where are they? On page 93. The actual details of the calculations from page 93 in your textbook. Okay, so all of this about what we pay to SARS and what we keep, I've explained that to you as well. Okay, then there's another very, very important part in this VAT chapter that you need. This is going to be more a case of memorizing and just learning which ones belong where. And this is your different type of VAT suppliers, or what we also call the VAT categories. So this is on page 81 in your textbook. VAT categories. Oh dear, what have I got there? That's not right, is it? VAT categories. There are 4 different VAT categories. You need to understand what each of them, you need to understand what belongs in each of the 4 categories, and a lot of that will be memorization. Because in order to get the VAT calculations correct, when you've got questions and they've given you a whole long list of transactions that you've then got to enter into your cash books or one of your journals, you have to know, does that transaction include VAT, and what are the rules for that particular transaction? Am I allowed to claim the VAT back, or am I not allowed to claim the VAT back? And does that particular type of supply include VAT? Or is it a 0 rated or an exempt supply, which means that there is no VAT added to that particular type of supply at all? Okay, so over here where we've got different types of VAT suppliers, SARS will only allow a VAT vendor, so that means someone registered for VAT, to claim back input tax. So remember, input tax is the VAT that you've paid on the purchases that you made. If that item that you've purchased, they call here, has a direct bearing, in other words, is directly related to whatever business you are engaged in. So in other words, it must be directly related to the outputs that your business produces in order to sell its goods or its services that it sells onto your own customers. If the goods that you've purchased are for personal use of the owners or have got nothing to do with the actual day-to-day business of your operations, then you're not allowed to claim that input VAT back at all, because the receiver says you can only claim VAT on purchases that you've made if those purchases are necessary for the running of your business, of your core business. So that means that VAT can't be claimed every single time a supplier has got an invoice with VAT included on it. You've got to look at what that supplier was, decide what the rules for that particular invoice are going to be. So here are our 4 categories. Some items are going to be what we call non-allowable. And that just means, yes, VAT is included. There is input VAT on the invoice of the goods that you've purchased, but you are not allowed to claim the VAT back from SARS as input VAT. So what happens in that case is that the total amount of that invoice, including VAT, becomes the cost for the business. We don't split that into excluding and VAT separate. We just leave it together as one total, and the total is then the cost that we've got to account for in our business. Then there are also some items that are zero rated, which means SARS is levying a VAT rate of 0% on those specific items. And if you look on page 81 in your textbook, you'll see that zero rated items, and these are the ones that you're going to have to memorize. Petrol, diesel, paraffin. There's a whole list of basic foodstuffs, which are mostly fresh fruit, fresh vegetables, eggs, brown bread, all those kinds of things that SARS does not add VAT to those goods at all, so they're zero rated. Sanitary products for women, which is a recent addition. They only added that to the list a couple of years ago. All exports, so any company that is exporting goods, exporting means you're selling the goods to a company that is not in South Africa. So when we make out an invoice to a company, maybe we sell into Malawi or Zimbabwe or Namibia, we do not add VAT. That's zero rated. And then any goods that a charity supplies to anybody, charities, or we also call them NPOs or welfare societies, they don't add VAT to their goods at all. So the most important ones you'll remember with zero rated is petrol and all of those basic foodstuffs and exports. Those are the ones that you'll come across most often in questions that you'll get. And then the other ones where there is no VAT added to the invoice at all are certain items are exempt, which means zero rated means VAT is added at a rate of 0%, and goods that are exempt means there is no VAT at all, they're entirely exempt. So on page 82, you've got the list of the exempt items, and these are life insurance. So take note that it's only what we call long-term insurance, which means insurance on life policies. So if you've got short-term insurance, in other words, you've insured your motor vehicle or you've insured the goods in your house, those are normal standard rated. It's only life insurance that's not. And then what they call financial services, so any interest. So if you charge one of your customers interest on an account, or if the bank pays you interest on your balance in your bank account, there's never any VAT added to interest. So interest specifically is always exempt from VAT. And then any rental that is charged on a house that somebody lives in is always exempt from VAT. If a property is being rented to a business or its business premises, then there is VAT included in that. It's only if the property is rented as a dwelling for someone to live in that it's exempt. And the last one that you might come across quite often in questions is passenger transport. So any transport that takes place on the road, like buses, taxis, or trains, all of those tickets that you pay, there's no VAT added to that. If you buy an air ticket for a flying in a plane, there is standard VAT added to that. So think of it as any transport that takes place on the surface, on the ground level, buses, taxis, trains, no VAT, exempt. And if you fly, there is VAT included in that. And then once again, donated goods or any services sold by a non-profit organization will be also exempt. So you can always remember any charity that renders services or sells goods, those will always be either 0 rated or exempt. So that list of 0 rated and the list of exempt suppliers, that you've got to memorize, so that when you see a transaction in a list and you see the business paid for petrol for their vehicles, then you know, okay, in that transaction there's no VAT. The business paid rental for their premises, you'll know, okay, there's no VAT in that transaction. And then on page 82 as well, you've got the rest of the non-allowable, the rules for non-allowable. And there's really just the two. The one that you'll come across most often in questions that you guys will get is the entertainment expenditure. So if a business pays out money for what SARS considers to be entertainment. So let's think of some good examples here. So staff refreshments, or taking your staff out for lunch at a fancy restaurant, buying pizzas for the staff to eat at lunchtime if they're working overtime, anything, taking customers out for drinks, that is all entertainment. So SARS says that is not a critical supply with a direct bearing on your business. In other words, you don't need to spend that money in order to produce the goods that you are spending. And so therefore they don't allow us to claim that VAT back. We have to bear the expense of that VAT as the end consumer of those goods. So if you look on page 82, it says entertainment expenditure includes staff refreshments as well as any other goods bought for the purposes of entertainment. So you'll see in some of your questions, they say, we bought a couch for the relaxation area of the staff, or we bought a kettle or a microwave for the staff kitchen. Those couch or microwave or kettle that the staff is going to use is also considered to be entertainment, and we can't claim that VAT back either. So it's not just the meals or any other type of entertainment. So the only exception is if either one of the employees travels out of town for business and they have to go out to a restaurant to eat because they've traveled. They live in Quebec and they've traveled to Cape Town for business and they have to stay in a hotel and eat at a restaurant, then it is a valid business expenditure and the company is allowed to claim the VAT back on that restaurant meal that the employee enjoyed while they were out of town. Because they're not at home, there's no other way they could have had a meal other than going out and buying food from somewhere. And then the last one is passenger vehicles. So we remember here we're looking at non-allowable items. So if a business buys a passenger vehicle, so it's like what we call a sedan car that is made to carry people, just normal people, I'm not talking about like a minibus taxi, just a normal sedan car, we are not allowed to claim the VAT back when we purchase that type of vehicle. If the business purchases a delivery vehicle, like a panel van that they're going to use to deliver goods, or a bakkie that they're going to use to cart goods around in, then they are allowed to claim the VAT back on that type of vehicle. So just remember, where it comes to vehicles, you've got to have a look at what type of vehicle did the business purchase to decide whether the business is allowed to claim the input VAT back or not. Passenger vehicles can't claim the input VAT. Delivery vehicles can claim the input VAT back. And the last non-allowable item is club fees and subscriptions. So if a business is paying gym fees or golf club fees for their executives, they are not allowed to claim the VAT back on that expenditure. only if they are paying subscriptions for a professional body. So let's say, for instance, it is an accounting practice, and the business pays the SACA subscriptions for those employees, then the VAT on those subscriptions, they will be allowed to claim back. But that's all in that section of your textbook. So just go through all of that. As I say, there is information there that you're going to memorize, and then there's also some stuff there that you're going to have to practice. Okay, guys, so that is as far as I think I can go tonight in terms of time. So I'm going to stop there, and then the actual worksheets, if you just have a look here, I've got some worksheets here, this VAT calculations one. There is a worksheet here where we've got cost, price, and profit, and you've got to calculate all these missing amounts. Oh, that's the same one. And then I think I've got one other one as well. This worksheet, well, probably not that one because that's quite simple. We've basically done this already this evening. But this worksheet, I will do a separate recording and work through the calculations to work out all of these missing amounts. And then I'll give you the calculations for each of those as well. Because this one here, we are working out the VAT calculation, and we are also working out the markup. Either some of them are markup on cost and some of them are markup on selling price in order to work out how much the profit or the selling price is. These ones the students always find tricky, so I'll do a separate recording for you for this worksheet over here. Okay. Buses, trains and taxis, no VAT on that because it is what I call road transport. So if you think of any transport that takes place on the ground, then there's no VAT. But air tickets, that includes VAT. Okay, so guys, I hope this is going to help you get on top of that and just get you going with your VAT chapter. And then, as I say, I will make some more recordings for you for these VAT calculations, and then I'll post those for you as well. Okay, so I hope this has been helpful for you, and it will get you going with your VAT. So very best of luck for working on your assignment 1. So remember, 6:30 in 15 minutes time, we've got the NSS with George. So try and log on to that. And then I will see you guys again in the next collab. Okay. Sorry, before I go, anybody got any other questions other than what Leica asked already? No one else. The rest of you guys are all good. Awesome. Thank you. Pleasure, Jana. Thank you for popping in. Thanks, guys, and thanks for your questions. I'm going to stop the recording now, and then I'll see you guys next time.